Okay, dear students, let's quickly start the class and few important announcements. Okay, I'll make those announcements at the end of the today's class, not now. Right now, students, we will be properly discussing the question number 1 from the pre-seen mock. And this question is, I think this question has covered uh, a really great area of, I would say, a big area of corporation as well as VAT, ethics, and individual else also. So it's a good question on multiple topics. So I'll try my best in a very limited period of time to discuss the entire question, because now this is not the time to have long classes because exams are extremely near. And ASA has also announced their mock dates. I hope everyone knows when is your ATX mock, and those students, they're in multiple papers, so they know that. What are the dates for other papers as well? It's a 50 marks question. Professional marks will be awarded. Demonstrated skill in communication. Communication means simply, if it's a report question in a report format, you should know that how to start a report. If it is notes for the meeting, so you should know that notes for the meeting, how will you start? Generally, for notes to the meeting, there is no prescribed, I would say, format. And if you will be answering through email, so you should know that how to start. That is communication marks. Analysis and evaluation means when you are solving the question, so it should look like that you know the data very well. Obviously, if you know the data very well, you are getting marks for analysis and evaluation. Skepticism, if you can challenge any information of the examiner, you will be getting marks for the professional skepticism, but it does not mean that you start challenging each and every information. Don't do that. Commercial acumen means that you should be commercially wise. If I'm going to make any decision, if I'm going to give any advice, or someone else is giving me the advice, should I accept that advice or not? Either that advice is correct or wrong, I should be able to understand that. So commercial acumen. I have already told many times in my classes, as far as you are properly solving the question, automatically you are getting professional marks. So in question 1, 10 marks for the professional, of course, at least 5 marks on ethics. Rest, they are technical marks. Let's start from a very first requirement. What it says: work to be carried out, extract from an email from your manager, date. We'll be using this date while answering the question. Please carry out the following work. Notes for the meeting in respect of corporate matters. Notes for the meeting in respect of corporate matters. So you can directly give this heading. Notes for, okay, they are asking notes for the meeting. So simply notes for meeting in respect of corporate matters. Prepare notes for us to use in a meeting with Patrice in respect of Dunstar Limited. The notes should be set out in a manner which will make it easy for us to refer them during the meeting and should address the issues set out below. Let's see the issue. Purchase of capital items on 1st April 2026, Exhibit 1. Now, this is very good. Now, for requirement A1, you have to just look Exhibit 1. That's it. Explain the corporation tax deductions which will be available in respect of the purchase of the capital items by Dunstar Limited on 1st April 26. Comment on the validity of advice received from Patrice university friend. So your university friend is giving you advice relating to taxation matters. So I would say there are more chances that advice is not going to be correct, because I don't believe that university friend is going to be tax expert, but we never know. But way to read for purchase of capital items on purchase 1, just Exhibit 1. And you have to just explain corporation tax deduction which will be available in respect of the purchase of capital items. So let's see Exhibit 1. So it's better to start the question reading from the requirements. Rather than you jump directly on the question, then of course it becomes a bit difficult. Dunstar, okay, capital purchases, exhibit 1. Let's see. It's here. Dunstar's capital asset purchase on 1st April 2026. Dunstar Limited will purchase the trade assets of business from an unconnected third party on 1st April 2026. This purchase will not be treated as a transfer of a going concern, because we know that transfer of a going concern, then no VAT implications for VAT. So you should not, so it will not be treated as a transfer of a going concern. It means VAT implications will arise. The asset of the business, the assets of the business include the following capital items. The amounts shown exclude VAT where applicable. Amounts do not have VAT. Cost to Dunstar: goodwill, registered trademark, office building 270. The goodwill will be amortized over a 10-year period. The trademark will not be amortized. The goodwill will be amortized over. The office building is 20 years old. Dunstar will use 2/3 of the office building. Now leave this. As its headquarters, so in the business, this building will be used 2/3. The remaining third will be rented out. Dunstar will not make an election to opt tax of office building for VAT purposes. Rent is an exempt supply. Rent is your exempt supply. So logically, 2/3 of the building will be used in the business. 1/3 will be used for exempt supplies. An old university friend of mine has suggested that it is possible to claim annual investment allowance in respect of the office building. Of course not. You can't do that. I do not think this is possible, but I would be grateful if you could clarify this for me. Of course, you will not get any, I would say, annual investment allowance against the building, but there's one possibility. If there are any plant and machinery which are within that office building, then of course, against that plant and machinery, you will get annual investment allowance, provided that if it is not already used. Now, first of all, goodwill. Simply, you will just have to write a single line: goodwill, no deduction is available. That's it. It's a 3 marks question. Registered trademark. This is intangible asset other than goodwill. Now, listen to me carefully. Intangible asset other than goodwill. Logically, your allowable deduction is higher of, I have to see accounting amortization. Then I will compare that with the tax allowable expense. Tax allowable amortization is 4% of the intangible asset. Of course, here, they're not amortizing it. It means accounting amortization is 0. So, of course, if accounting amortization is 0, it is better, it is advisable to take 4% of the trademark as tax allowable deduction. Third point, relating to the, I would say, office building, no annual investment allowance is available relating to the office building. But if there are within the office building, let's say there are any plant and machinery, or you can say if there are any integral part of the building like a ventilation system or something like that, integral features of the building, against that there is possible to get AIA if it is not already used. This is what you need to just write. I've already done this to save the time, because now we should not be spending so much time. Meeting notes for, they have given us a heading. Let's use the heading from here. Meeting notes, I think for in respect of corporate matters, it was something like that. So I'm just taking this from the question. Meeting notes in respect of corporate matters. This heading is given in the question. Just copy paste. In respect of corporate matters. Client name, subject, multiple tax issues prepared by tax senior, date is given in the question. Now, purchase of capital items on 1st April 26, corporation tax deduction, goodwill, simply no deduction is available, that's it. Registered trademark, allowable deduction is higher of accounting amortization and 4% of trademark. Here, 4% of trademark is better because of no amortization, because they are not, company is not getting any accounting amortization. So obviously, I'll go for 4% of the intangible asset. Office building, no annual investment allowance for building. So the advice given by the Patrice friend is wrong. And plus, it is mentioned in the question that this building is 20 years old. If this building is 20 years old, it means it's not a newly constructed building. So you will not be getting SBA also. There is no structures and building allowance as the office is not newly constructed. AIA could be available on plant and machinery within the building. So straightforward, this is what you need to explain for 3 marks. Now let's go back to the next requirement. I hope it is extremely clear to everyone. There shouldn't be any problem at all. All you need is just write the relevant rule at relevant place. Okay. Consideration of alternative ownership structures of Dunstar Exhibit 1 and 2. Loss relief, explain the extent to which the budgeted trading loss of Dunstars Limited for the year ended March 2027 would be available for offset by Abbott Limited, Bufa Limited, and Mr. Blan or Blini under each of 3 structures. Explain the extent to which budgeted trading loss of Dunstar, so this company is having loss, the year end March 2027 would be available to offset. There's a company, Abbott, Bufa, and there's individual also under each of the 3 structures. First of all, everyone should know that we won't be able to basically transfer any loss to the individual. There's no such thing in taxation at all. So no company can transfer losses to the individual. So that's all. Outright, we'll say no. Second, yes, Abbott, Bufa, they can get the losses from Dunstar, provided that they're talking about if trading loss. Now listen, it is possible that Bufa and Abbott, Dunstar can transfer losses to them, but for that 75% loss relief group is necessary. If they all are a part of 75% loss relief group, then obviously losses can be transferred. If they are not a part of 75% loss relief group, then trading losses cannot be transferred. It's very straightforward. Repeat. If they are part of 75% loss relief group, only then Dunstar can transfer the trading loss. Otherwise, Dunstar cannot transfer the trading loss. So let us first stick to the trading loss, then we'll see the next part. And this A2 is having 15 marks. Right now, loss relief, Dunstar, capital structure. So let's see. Extract from an email from Patrice, date is this, Dunstar. As I mentioned when we last spoke, Dunstar will be incorporated and begin trading on 1st April 2026. Okay. It will be a UK resident company and will prepare accounts to 31st March each year. Dunstar trade will make only taxable supplies. That's a good thing. Ownership of Dunstar Limited. 3 alternative ownership of structure of the company's ordinary share capital are being considered XYZ. Structure X. Abbott Limited will acquire 80% of the Dunstar. Bufa, just 10%. Mr. Bleen, 10%. This is 100% of the share capital. Abbott Limited, Bufa, Mr. Bleen, all are resident in the UK. Abbott, Bufa prepare accounts to 31st March each year. Mr. Bleen is a sole trader who prepares accounts to 31st March each year. Abbott, Bufa, and Mr. Bleen are not connected with each of in any other ways. Now listen, first of all, structure X. Structure X, Ambit Limited will get 80% holding in Dunstar. There is one Bufa Limited. They will be getting 10% holding. And there's one individual. Mr. Bleen will also get 10% holding. Now, listen. First of all, the first line will be that, of course, Mr. Blaine will not be getting any losses from Dunstar because there's no company cannot transfer losses to the individual. That's it. Next, Dunstar cannot transfer any losses to Bufa Limited. Why? Because Dunstar and Bufa, they're not making 75% loss relief group. We are left with only two companies, Abbott Limited and Dune. Abbott is acquiring 80% in Dunstar, which means that Abbott is having at least 75% holding in Dunstar. So logically, Abbott and Dunstar, they are part of 75% loss relief group. So that is why Dunstar can transfer trading loss to Abbott Limited. Okay, so Dunstar is going to be a surrendering company, and surrendering any company can transfer their trading losses without using it first. But Abbott is a claimant company. Normally, Abbott company, claimant company, first of all utilizes their own losses, and Abbott company will utilize the loss from the Dunstar against their taxable total profit. Taxable. I'm talking about taxable total profit means that Abbott has already utilized their all losses, plus Abbott has utilized their qualifying charitable donation. After that, if there is any taxable total profit against that, Abbott will utilize the loss from the Dunstar. And the maximum loss which Dunstar can transfer to Abbott is lower of the amount of the loss of the Dunstar and the taxable total profit of Abbott, whichever is lower. This will be the maximum loss which Dune can transfer to Abbott, because according to the corresponding period, but they do have the corresponding period, that 12 months matching period is there. So let me repeat the entire discussion. Dunstar cannot transfer losses to Mr. Bleen. Finished. Dune cannot transfer any losses to Bufa because they are not making any group. Abbott is having at least 75% holding, in fact, more than 75. So Abbott and Dune, they are part of 75% loss relief group, number one. Number two, Dune can maximum transfer the loss to Abbott, lower off the amount of the loss and the amount of taxable total profit in Abbott. This is what we need to discuss regarding structure X. Then we've got a structure Y. In a structure Y, Abbott, one more thing, if you have time, you can also discuss this. The structure as X does not make any consortium with Bufa and Abbott. Why? Because in order to be a consortium company and consortium member, actually consortium member should be having at least 5% holding, and maximum holding should not be more than 74%. Abbott is having more than 74% holding in structure X. That is why there's no relationship of consortium. Again, individual cannot be a part of consortium. Now let's talk about structure Y. Number one, Abbott will be having 65% holding. So directly, Abbott is not making any 75% loss relief group with Y. Mr. Bleen will be having 35% holding, but again, consortium cannot be with individual. Even though Mr. Bleen is having at least 5% holding, even more than that, Abbott does not have the holding more than 74%, but again, we cannot make a consortium arrangement with individual. So structure Y is nothing. Now let's talk about structure Z. In a structure Z, Abbott will have 70% holding, Bufa will have 30% holding. It means structure Z is hinting towards consortium. Abbott, they will have 70% holding in Dunstar. Bufa will have 30% holding in Dunstar. So Abbott and Bufa, they will be consortium members. Dunstar will be a consortium company. Now, Dunstar can transfer their 70% loss to Abbott. Dunstar can transfer 30% of their loss to Bufa. So under structure Z, it's a consortium arrangement. Why it is a consortium arrangement? Because each company is having at least 5% holding, even more than that. and one company directly does not have more than 74% holding, or in the combined holding is at least 75%. So obviously all the arrangement of consortium are met. So Abbott and Bufa, they are consortium members. Dune is a consortium company, but Dune will transfer 70% of their loss to Abbott, which is the maximum loss which Dune can transfer, and the 30% of loss to Bufa. This is what you need to discuss in a structure X, Y, and Z, which I've again already done to save the time. Excuse just a minute, please. So actually here we just need to discuss all the structures X, Y, and Z. Consideration of alternative ownership of structure. This is A2 of Dunstar. Loss relief. Mr. Blaine cannot claim any relief. Mr. Blaine is not a company. That's it. Story is over. X. This main is structure X. Abbott and Dunstar form a 75% loss relief group. Let me change the color. It's too much red. Abbott and Dunstar form a 75% loss relief group as Abbott holds at least 75%. Maximum loss which can be transferred, lower of Dunstar loss, and taxable total profit of Abbott, whichever is lower. No relief for Bufa because not a member of 75% loss relief group. Now structure Y. You can see, student, one thing, that whatever you people have studied, now here you're just explaining the different structures, which obviously you have studied. Structure Y, no loss relief group due to less than 75% holding. There's no consortium, as an individual cannot form a consortium. Z. Abbott, Bufa, and Dunstar form a consortium as at least 75% shares held by companies, each with at least 5%. An individual holding is not exceeding 74. 70% of Dunstar loss can be transferred to Abbott and 30% to Bufa. So only explanation of the structure X, Y, Z. Now let's go back to the requirement again. Rollover relief. Explain whether or not Abbott Limited will be able to roll over the chargeable gains in respect of each of the building sales against the office building purchased by Dunstar. Now listen, we know that Abbott and Dunstar, they are making 75% loss relief group. So obviously they are member of 75% capital gain group as well. Roll over relief is possible within capital gain group, and definitely we know that Abbott Limited and Dunstar, they are part of 75% capital gain group. But don't forget one thing, rollover relief is possible when qualifying business asset is sold, let's say by one company, and another company has purchased the qualifying asset within a qualifying period. And if you recall, the qualifying period is 12 months before the disposal and 36 months or 3 years after the disposal. So if the qualifying asset is sold and the qualifying asset is purchased within the qualifying period, only then rollover relief is possible. And don't forget one thing relating to rollover relief, which is very important, that we have to make sure that entire sale proceeds should be invested in the replacement asset. Because if there is any partial reinvestment, if you recall, in case of partial reinvestment, your chargeable gain is lower of gain itself and amount not invested. Repeat. Rollover relief is possible when there is a 75% capital gain group. So we know that Abbott and Dune, they are part of 75% capital gain group. Number one. Number two, qualifying asset is sold and another company has bought the qualifying asset within a qualifying period. And qualifying period is 12 months before the disposal and 3 years after the disposal. And in order to get the 100%, I would say, rollover relief, then you need to reinvest the entire sale proceeds. They are saying explain with supporting calculation which of Abbott's gain should be relief in order to obtain what? Maximum tax benefit. So you have to tell us how much maximum rollover relief can be claimed. Let's read the question. Abbott, Dunstar. Abbott, and Dunstar. First of all, Dunstar asset purchases 1st April 2026. Date of purchase. Office building is a qualifying asset. But there's one problem within that office building. Dunstar used 2/3 of the office building as its headquarters. So office building is a qualifying asset. But the problem is I cannot get a rollover relief against entire 270. Why? Because entire office building is not used in the business. Only 2/3 of the building is used in the business, which means that if I take 2/3 of 270, I'm getting 180. Now listen carefully. It means office building, which is a qualifying asset, which is bought by Dunstar. But the problem is entire 270 is not relevant for us. The relevant amount is 180. Okay. Why relevant amount is 180? Because entire building is not used in the, I would say entire building is not used for business. 1/3 of the building you have given on rent, which is an exempt supply. Now let's see Abbott. Abbott is here. Abbott schedule of chargeable gain date is this. Abbott Limited has entered into the contract to sell how many buildings? 3 buildings. These buildings have always been used in the company's trade, so qualifying business asset. Queen's building, Roon building, Play building. Okay. Plea building, something like that. We have got chargeable gain, sale proceed 280, 340 in this. Date of disposal. Now this is important. And Dunstar has purchased on date 1st April 26. Now listen carefully. 1st April 2026. Can I say the capital gain which Abbott is having on the disposal of Queen's building, that capital gain can be rollover against the purchases of Dunstar. Why? Because if I go 12 months back from the disposal date, so the purchase date is within 12 months if I compare from the date of disposal. Because number one, you will be selling a qualifying asset. Building is a qualifying asset. You have to buy a qualifying asset. Dune has bought an office building, which is a qualifying asset within the qualifying period. And the qualifying period is 12 months within the date of disposal, before the date of disposal, and 3 years after the date of disposal. So from 1st October 2026, if we go 12 months back, so within 12 months before the date of disposal, Dune has bought the building, number one. So Queen's chargeable gain on Queen's building is qualifying for rollover relief. How much? I'll come to this. Now, second, Roon building, date of disposal is 1st Feb 2027. If you go 12 months back, so within 12 months, the date falls. Because from 1st Feb 2027, if I go 12 months back, so I can go till 1st Feb 2026. So it means there are 2 capital gains. They are qualifying for rollover relief. One is capital gain on Queen's building, another is Roon building. Now let's see the third one. Now there's a problem. If I go 12 months back, so I'll reach on 1st July. Students, can I say that the gain on third building is not qualifying for rollover relief? Why? Because the date of purchase by Dune Limited is not within a qualifying period. Is that clear to everyone? Because first of all, you have to tell your examiner marker that only gains on Queen's building and Roon building, they are actually qualifying for rollover relief. Why they are qualifying for rollover relief? Because they are within a qualifying period. And the third building gain is not qualifying for rollover relief because it is not within a qualifying period. Now, let's talk about how much amount we can roll over. Actually, the sale proceed is more than what we have reinvested. Now, the rule says in case of partial reinvestment, chargeable gain is lower of number one, gain itself, and the second is amount not invested. If you look at the first building, the gain is 150, the sale proceed is 280, but logically Dunstar has invested 180. Why 180? Because 180 is qualifying for I would say rollover relief. So it means the sale proceed is 280, but you have invested only 180 in a qualifying asset. So how much you have not invested? So can I say in case of Queen's building, chargeable gain is 1 lakh. If chargeable gain is 1 lakh, can I say then rollover relief is 50,000? Why 50? Please try to understand. The gain is 1,50,000. An amount not invested is 1 lakh. And we have written chargeable gain is lower of. Chargeable gain is lower of gain itself and amount not invested. So out the total gain is 1,50,000. Out of 150, 100,000 becomes chargeable. So it means how much you can get as rollover relief? 50,000. Is this clear to everyone? It should be clear, seriously. It's a simple partial reinvestment case. The chargeable gain is lower of gain itself and amount not invested. So here we are not investing 1 lakh. So obviously that 100,000 becomes chargeable. So rollover relief is 50. This is if we are taking Queen's building. Now, if you talk about the second Rune building. Now in Rune building, what is happening? Your chargeable gain is 2,80,000. Your chargeable gain is 2,80,000. Okay. And the sale proceed is 340. The sale proceed is 340 minus 180. Now let me, I think it's a typing error or something. It is actually 80,000. It's not 280. So your gain is actually 80. Now listen, the gain is 80. And how much we have not reinvested? 3,40,000 minus 180, 160. And the chargeable gain is lower of gain and amount not invested. So can I say entire 80,000? Entire 80,000 becomes chargeable. Now listen, if the entire 80,000 becomes chargeable, then logically your rollover relief will be 0. Repeat, entire 80,000 becomes chargeable in case of the Rune building. If entire 80,000 becomes chargeable, it means you're not getting any rollover relief. Now, we should be according to the question, we have to tell our examiner maximum rollover relief. Can I say the maximum rollover relief is possible, which is 50,000 pounds, if I'm getting this rollover relief on the disposal of Queen's building? On the disposal of Rune building, we are not getting any rollover relief. Due to partial reinvestment, entire 80,000 becomes chargeable. So let's come here. This is what you need to explain. Okay, let's change the color. Rollover relief is available under Structure X as Abbott and Dunes are part of 75% capital gain groups. Disposal of building by Abbott is a qualifying asset used in the business. For rollover relief, new qualifying business assets should be purchased within 12 months before disposal and 3 years after disposal. New office is purchased on 1st April 26. Only gains on Queen's building and Rune building qualify for rollover due to qualifying period. For 100% rollover relief, all the proceed must be reinvested in a qualifying business asset, which is not the case here. Only 2/3 of the new office is used in the business. Qualifying investment is 180. In case of partial reinvestment, chargeable gain is lower of gain itself and amount not invested. Now, Queen's building, we have got a gain 150, Rune building 80, proceeds 280, 340, proceed not invested is 1 lakh, 180. Chargeable gain is 1 lakh 80,000, rollover relief is 50 and 0. So for obtaining maximum rollover relief, the gain on Queen's building should be relieved rather than going towards our own building. Now listen student, again I would say only those students they were in a position to recall the number one concept of 75% capital gain group and partial reinvestment case. They could have easily answered this part. Now let's go to the requirements. Recovery of VAT in respect of purchase of office building exhibit 1. Again, Patrice has advised me that unconnected third party seller has opted to tax the office building such as VAT will be charged on the sale of Dunstar Limited. Calculate the total input tax which Dunstar Limited will be able to recover in respect of the office building under the rules of capital goods scheme. You should include calculation of amount VAT recoverable on initial purchase of the office building and any annual adjustment required under capital goods scheme. Assume that office building is rented out until March 2030. We are buying on 1st April 26. So it means 27, 28, 29, and 30. 4 years. So first 4 years, 2/3 of the building was used in the business. 1/3 was given on rent. And that from 1st April 2030, Dunstar will use the whole of the building in its business. Now listen carefully, student. Very interesting. First of all, we'll explain that initially 2/3 of the input VAT will be recoverable. The amount of the building is 270. How much input we have paid? 54,000. How much is initially recoverable? 2/3. Why 2/3? Because 1/3 is only 2/3 of the building is used in the business. You're used in the taxable supplies. I'm getting 36,000. So basically, in the first year, you will be getting 36,000 input recoverable. Now listen to me carefully. Second year, third year, and fourth year, no adjustment. Why no adjustment? Because in the first 4 years, only 2/3 of the building was used in the business. 1/3 was given on rent and not opted to tax, which is an exempt supply. So repeat, we know that under capital goods scheme, adjustment time period is 10 years. But logically, there's no need of any adjustment for the second, third, and fourth year. In the first year, you will just get 36,000 input VAT recoverable, but after that, there's no adjustment for 2, 3, and 4. And then from 5 till 10, 6 years, entire building will be used in the business. Initially, it was used 2/3, but in the last 6 years, the entire building will be used in the 100% in the business. It means in the entire building will be making taxable supplies, which means that in the last 6 years, the taxable supplies proportion becomes 100% from 2/3, which means that in the last 6 years, we will be able to reclaim the input VAT. How will we reclaim? Now listen. 54,000, this is the total which we have paid divided by 10 because we know that adjustment period is 10 years multiplied by 6. Why I am multiplying this 6? Because the last 6 years, the building is 100% used in taxable supplies. Then into percentage of taxable supplies now minus the percentage, original percentage. Logically, we know that now logically your percentage is 100%. Initially, it was 2/3, you can say 66.67%. Or you can do another way. 54,000 Divide by 10 into 6. Now, logically, 3 upon 3. Initially, it was 2 by 3. Initially, 2/3 of the building was used in the taxable supplies. Now, the entire building is used in the taxable supplies. Keep watching. 54,000 divided by this. So, I will simply add them. So, a little maths, not more than that, into 1 upon 3. Let me use the calculator. Let's see what we are getting. 54,000 divided by 10 multiplied by 6 divided by 3. I'm getting 10,800. So in the last 6 years, reclaimable input VAT will be 10,800, initially 36. So the total input which we can recover is 46,800. From this capital goods scheme, the total input which we can recover is 46,800. Let's see. Just a minute. Input VAT recoverable by Dunstar. This is they have paid 56. No adjustment from 2 to 4. From year 5 till 10, that is 31st March 31 onwards, 100% use in the business. Input VAT, and this will be your year number 5, logically. We know that it is mentioned from basically 1st April 30 onwards, it becomes 100% in the business use. So 31st March 31 is going to be year number 5. So logically, total last 6 years, building will be used in the business. So your recoverable will be 10,800 in the last 6 years. Initially, it was 36. Again, you can see simply a capital goods scheme application. So total input VAT recoverable is 46,800. Now let's go back to the requirement again. We have done this as well. Okay, now becoming tax advisors to Bufa Limited, Exhibit 1. Becoming tax advisor to Bufa, Exhibit 1. Our firm has been asked to become tax advisor to Bufa. Send me an email which covers the following. State what is meant by fundamental principle of integrity. Means you have to be honest, straightforward. Knowledge, it means make sure that you should have the relevant expertise. You should be able to understand the business of the client. We require in relation to the principle before we agree to become tax advisor to Bufa. Explain why our firm may have a conflict of interest if we become tax advisor to Bufa Limited, and the action we should take to address such a conflict. Now, student, first of all, you need to understand one thing. I think I did mention this earlier also. In order to prepare yourself for ethics, please do not spend so much time. Just if you go through 3 to 4 answers of the past papers, that is good enough to get a very good idea on ethics. Number 1, our firm has been asked to become a tax advisor. Send me an email which covers the following. State what is the meaning of principle of integrity. Means you have to be honest, you have to be straightforward. Second, knowledge means make sure that before accepting a new client, we should have the expertise to provide the services, or you can say, plus we should be able to understand the business structure of the client. So this is what you have to write regarding integrity and knowledge. And let me tell you one more thing. Students, you will get ethics marks when you will be properly explaining what examiner is asking. They are asking integrity, just single line is enough. Honest, straightforward. Knowledge means simply we should be having the expertise to serve the client, plus we should be able to understand the business structure of the client. We require to this principle before we agree to become tax advisor to Bufa. Now they're asking one more thing. Explain why our firm may have a conflict of interest if we become tax advisor to Bufa, and the action we should address such a conflict. Now let's see. There should be more information. Okay, okay, okay. You are an ACCA student working for a firm. Your manager has been asked with Patrice, the managing director of Abbott Limited. You are ACCA student working for a firm of accountant. Your manager has been discussion with Patrice, the managing director of Abbott, a client of your firm. Stop now. How the conflict of interest comes. Now listen. We are already providing services to Abbott. We are already providing services to Abbott. Now, Bufa company is coming to us and they're asking us to give them the services. Integrity, we have explained. We have to be straightforward. Knowledge, we should be able to understand the business structure of Bufa. Now, how the conflict of interest comes. Now, let me explain that. Then don't forget this. We are already providing services to Abbott. Now, come here. This is a Dunstar company. Of course, Abbott is interested to acquire Dunstar. Logically, Bufa is also going to get the holding in Dunstar. Either it could be 10%, or there's a possibility of 30% as well. Within that 30%, we know that Dunstar company will become a consortium company. Abbott and Bufa, they will be consortium members. So right now, basically what is happening, you can say that Abbott and Bufa, they both are interested getting the holding in Dunstar. We are already providing services to Abbott. Now, Bufa is asking us to provide the services. How the conflict of interest comes? There are great chances of conflict of interest because we are already providing services to Abbott. And both Bufa and Abbott both are interested to get the holding in Dunstar. Now, there's a possibility that we might give some information to Abbott regarding even Bufa, that Bufa is interested to get the holding in Dunstar. We might provide any information to Abbott, so that might give the Abbott any benefit. So there's a possibility of conflict of interest because we are already providing services to Abbott, and now Bufa and both are interested to acquire one company. Now, how to actually save ourselves that we should not be there, there shouldn't be any conflict of interest. We can, number one, we should disclose this to Bufa, even to Abbott as well. We should disclose to our client, especially we should disclose to Bufa that we are already providing services to Abbott. Number one. Number two, how to reduce that conflict, that we should be sending a different team to Abbott Limited and we should be sending different team to Bufa Limited. And plus, we need to make sure that any confidential information should not be leaked. Repeat, disclose that to Bufa that we are already providing services to Abbott. Plus, how to reduce that impact of conflict of interest, we should be sending a different team to Abbott and different team to Bufa, and make sure there should not be any disclosure of confidential information. This is what you have to write. Let me repeat. I'm just telling you ethics part. Number one, integrity means we have to be straightforward. Knowledge means that our company should be able to understand the business structure of Bufa. Third, conflict of interest. There are chances of conflict of interest because we are already providing services to Abbott, and Bufa and Abbott, they both are interested to get holding in Dunstar. There's a possibility of conflict of interest. We should be disclosing this to Bufa that we are already providing services to Abbott, and we should also be then disclosing services to, let's say, at least we should be disclosing this to Bufa. If you can disclose both of them, that's very good. Better to disclose both of them. Plus, how to reduce this conflict? You can reduce this conflict by sending different teams to Abbott and different team to Bufa. Different teams should be providing services to Abbott Limited and Bufa Limited. Teams should be different. Plus, any confidential information should not be disclosed to any of the organizations. This is what you need to write regarding ethics part. I think fair enough. I have just made an answer plan, not written the entire answer, just to save the time. Oh, let's see. Becoming a tax advisor, Bufa, this is, you have to write an email to manager from tax senior, date, subject, becoming tax advisor, integrity. Then you have to explain integrity, straightforward, understandability, that is regarding knowledge, conflict of interest. So try to take the action so that try to reduce that, take the action so that there shouldn't be any conflict of interest, like disclosing the client already, plus sending different teams. Different teams should be serving both the clients, plus make sure no confidential information should be disclosed. Now let's go back to the question. Okay, look at this. Our firm has been asked to become tax advisor. Send me an email which covers the following. Now listen, again, look at this email. Now you have to make a proper format of email. If you're not making a proper format of email, then you will be losing communication marks. First, a proper format of meeting notes, and then email. Now, third part, exhibit 3. Oh no, something is wrong. Thank God. One note was not working. Now it is working. Camille, private client, exhibit 3. Now, third one is prepare a memorandum. Now, you'll be making a memorandum for Camille client file which addresses the issues set out below. Structure A. In respect of budgeted tax adjusted trading loss, £50,000. Explain with supporting calculation the relief available against Camille. Income and chargeable gains for the tax year 26-27, and then tax saving as a result of this relief. Now, this part is altogether different. You have to just make a memorandum for Camille client file, which addresses the issues set out below. Structure A, there's a budgeted tax trading loss of 50,000. Explain with supporting calculation the relief available against Camille income and chargeable gain of what? Which tax year? Now listen, student, you have to stick to the tax year 26-27 only. Repeat. Now examiner has specifically mentioned that you have to be then stick to the tax year 26-27 only. Now if you are mentioning any other tax year, you will not be getting marks at all. Why you will not be getting any marks at all? Because they are not asking us to give us all the, I would say, discuss all the options. They're not asking question like this. Okay. First of all, part C, you have to just make a memorandum, and then we'll read the question also. Part C is relating to Camille. This is a private client work. Memorandum. To client file. From tax senior, date is mentioned in the question. Date is 3rd September 2025. Subject. What is the subject? What Camille wants to do. Camille. In respect of budgeted tax adjusted trading loss of 50,000. Explain with the support calculation the relief available against Camille, and there's a structure B also. Let's read the question regarding Camille. We'll get the subject. Otherwise, multiple tax issues is a very good subject. Let's see, is here. Camille is considering two alternative structure of her new business. So the new business becomes the subject. Subject is simply new business of Camille. Right now, we are dealing with structure A, loss relief against income and gains. Loss relief against income and gains. And the tax year, it is specifically mentioned 2026-27. Now let's see what is the income of Camely and whatever the gains. We know that you cannot directly set off the trading loss against the gain. Can I say first you have to utilize your loss against the total income, then if there's any loss, trading loss left, that can be set off against the capital gain. Camely. Bird. Share. Extract from an email from your manager. Date is this. Background. Camely, who has always been UK resident domicile, has a private client of our firm for a number of years. She's considering starting a new business which will supply student. Please, you will not be writing special opening a loss relief because they have not asked such things. If you are mentioning that other options are available for the Camely, that she can do this, is that you will be getting 0 marks. Why 0 marks? Because examiner is not asking us how many options are available with the Camely. Examiner is specific to the 2026-27. Mentioning anything else means you are not getting any marks. She's considering starting a new business which will supply consistency services. It will begin trading on 1st May 26. Will prepare accounts 31st March each year. Camely will only person working in the business, only one person. Okay. Income and chargeable gain for the tax year 26-27. On 6 April 26, Camely plans to dispose of a residential investment property and is expected to get, there's a capital gain will be 15,000. Chargeable gain is 15. Camely only other source of income tax year 26-27 will be the salary from her current employer. That is Skylar Limited. Skylar Limited 48,000 per annum. Okay. Structure A. If Camely adopts structure A, she will trade as an unincorporated sole trader. A tax adjusted trading loss will be 50. In the budget is budgeted for the tax year 26-27. Subsequently, business is budgeted to be profitable. So right now there will be a loss. Okay, she's having a salary of 48,000 and there's a capital gain of 15 also. We have to just mention how much tax could be saved. Structure A. So, okay. Now, first of all, relief against the income. Relief against income. Before the loss relief. After loss relief. Salary. Salary is 48,000. Salary is 48. Now, loss relief. There is no other income. The loss amount is 50. So after loss relief, obviously the salary becomes 0. Personal allowance is going to be 12,570. Taxable income. 48,000 minus 12,570 gives me 35,430. Obviously, entire taxable income is taxed at 20%. If we take 20% off, 35,430, 20% is 7,086. Now, how much tax we will save if we go for the loss relief? Without the loss relief, you will have tax 7,086. With loss relief, can I say tax will become 0? It means tax saving. Due to loss relief. 7,086. But we have not utilized the entire loss. Still 2,000 is left. We know that we cannot directly deduct the trading loss against the chargeable gain. First, we have to utilize the trading loss against the total income, which we have utilized. Gain is given in the question, which is 15,000. Let's go back. Is it true or no? Abbott, Camely. Camely is here. Camely plans to dispose of residential. This is also very important. Residential property. If there is a space in the basic rate band, then 18, otherwise 24. Applicable CG3 rates are 18 and 24. Amount is 15,000. Okay. Now, before and let's say after. Chargeable gain is 15,000. Loss relief. Actually, the total loss is 50. Out of 50, we have already utilized 48. We have already utilized 48,000. Annual exempt amount 3,000 and 3,000. Taxable gain 12 and now CGT. Student, if there is a space in the basic rate band, then 18%, otherwise 24. Okay. Taxable income is 35,430, which means that 37,700 without the loss relief 34,430. We do have a space in the basic rate band, but only 2270. Logically, 2270 into 18%. I'm getting 408. So make it 409 because I'm getting 408.6. Student, here, entire 10,000 will be at 18%. Why entire 10,000 will be at 18%? Because due to loss relief, entire basic rate band will be available. Because we have utilized the entire, we have deducted, it will fall in the basic rate band because entire 37,700 is available. But without the loss relief, we do not have the entire basic rate band. In the basic rate band, we only have a space of 2270, which means that 12,000 minus 2270 into 24%. I'm getting 2,335.2, so leave that 0.2. 409 plus 2335. Now CGT saving. CGT saving. Without loss relief, it will be 2744. With loss relief, it will be 1800. So here comes the saving. Saving is 944. So total saving. Income tax plus CGT. 7086 plus 944. 8030. So your total income tax and capital gain tax saving will be, total saving will be 9030. This is your total saving. Now let's go to the other part. Structure B. In respect of structure B, calculate the employment payment which will be deemed to have been paid to Camely and explain the implication of this payment on Persha Limited, corporation tax liability and taxation of any dividends subsequently paid to Camely by the company. Let's see the structure B, what they're saying. If Camely adopts structure B, she will form a limited company, Persia Limited, to operate the business. The company's budgeted fee for the first year is going to be 76. Persia will pay Camely a gross salary of 33,000 for this period. Under structure B, the company will form B, a personal service company for the purpose of IR 35 legislation. All of them income will be derived from a relevant engagement to a small client. So students, simply by using the format of IR 35, we have to calculate deemed employment income. We need to calculate deemed employment income. So come here. Structure B. We just need to calculate deemed employment income by using the format of IR 35. Student, if you don't know the format of IR 35, then obviously you will not be able to solve this. So you need to have a very good grip on the format. Income which we are getting is 76,000. Income from relevant engagement. Then there's 5% statutory deduction, if you recall. Less 5% statutory deduction. 3,800, then deduct the salary which we have already paid, 33,000. Now we will also deduct the employer's NIC on this 33,000. Less employer's NIC. All NIC and other income tax rates, they will be given to you in exam. 33,000 minus 9,100, I'll get into 13.8%. 3298. So 76,000 minus 3,800 minus 33,000 minus 3298 gives us 35,902. And this is your deemed salary plus employer's NIC. This is deemed salary plus employer's NIC. It has the employer's NIC. It means that this 35,902 is actually 113.8%. So we have to deduct employer's NIC less employer's NIC. 13.8 upon 113.8. 35,902 into 13.8 upon 113.8 gives us 4,354. Here comes your deemed employment income. $31,548. Now, student, the entire deemed employment income and employer NIC is obviously deductible expense for Persia Limited. Deemed employment income and employers NIC are deductible for Persia Limited. Now listen very carefully. Any dividend which we are paying to Camely, obviously that will not be taxable for Camely. Why? Because the entire deemed employment income, on that entire deemed employment income, that Camely will have to pay tax. So any dividend paid to Camely, they are coming from the deemed employment income, so will not be taxable. So simply dividend paid to Camely from deemed Employment income will not be taxable. And one more thing, in the entire company, there is one employee, and that employee is chameleon, who is the director as well. That is why employment allowance of £5,000 is not available, which is available, we know that on cash benefit, but here it is not available because in the entire organization, there's one employee and who is the director as well. So employment allowance of 5,000 is not available. So students, that is all about your question number 1 on the pre-scene mock, September 2025. Now, very few announcements which are extremely important. Number 1, I really want every one of you do attempt the question number, I would say 2 and 3 from this pre-scene mock. Try to attempt them in a proper examination environment. Number 1. And after attempting, if you have any question, any confusion, you can always ask in your relevant WhatsApp group. Number 1. Number 2, after attempting those questions, if you want that, sir, you should make a video on that, question number 2 and 3. So I'll make the video and upload on your portal. No issue at all, but you have to tell me. Another thing, in the entire ATX, of course, we have revised number of chapters, but in the entire ATX, if there is any topic and you want a revision, a short revision video on that topic, so please, today, I would say, highlight that topic. Either it is 1, 2, 3, I don't mind at all. So what I'll be doing, within next 2 to 3 days, I will upload all those videos where you need a short revision. Already we have covered, I think, if you ask me, so we have covered, I think, till CGT already in the short videos. The remaining area was VAT and I think corporation tax. The rest we have already covered in the short videos. But again, is there, like today, there was one message on VAT, so I'll definitely upload a short revision video on VAT. But repeat, if there's any other topic in the entire ATX where you need a short video, you have to just mention. You have to just mention in the relevant WhatsApp group. Number 1, I'll come to this. And students, ATX June 25 pre-scene mock videos are already there on the portal. If you are unable to find the video, so please just ask the admin, they will share with you. So June 25 videos, pre-scene mock, I've already uploaded. Plus, if there's any other question, like there's a question June 25, if you want me to discuss that, I'll upload the video on this question as well. No issue at all. So I will upload the video on June 25, question number 1. Done. Now, few more things regarding passing the paper. Students, what should be the priority sequence when you are preparing yourself for exam? Number 1, first priority should be, student, whatever you have done in the classes, you have to have a really good grip on that. Because if you check the entire course, so within 71 lectures, the entire course gets completed. And the good part is one lecture is approximately just 40 minutes long. But from lecture number 72, it goes till around approximately 107 or maybe 110 videos. From 72 till 110 videos, all are practice videos. And you have to watch each and every video. You're not supposed to leave even a single video. Plus, number 1, the regular course, make sure you should not be leaving a single lecture in that. Practice videos. Third, pre-scene mock, June 25 is already on the portal. Then pre-scene mock, September. And finally, I think dates, ASA admin, they have announced the dates for your ATX mock, which ASA is going to conduct. Make sure that you should attempt ATX mocks on a relevant date, relevant timings, which ASA admin, they have announced. And we are conducting mock for part 2, part 3. We are conducting for each and every ACCA paper. When you will be attempting that ASA mock of ATX and you will be submitting to us within a given period of time, then I'm going to personally check and I'll give you a personalized feedback. But and one more thing, students, very important. See, now today is almost 17. Now listen very carefully. in next 1 or 2 days, maximum you can do 1 or 2 more additional new questions. But listen to me carefully. After, I would say, next 1 or 2 more days, please do not do any new question. No. Now, the last 12 to 13 days, or let's say last 14 to 15 days, you should be just doing all those questions which you have already done. Because 12 days, 13 days before the exam, going for the new question is not advisable at all. Because now this is not the time that you go for the new, I would say, questions. So I'm saying you can go for the new question next 1 or 2 more days, but after 2 more, let's say deadline is 20th of this month. From 21st onwards, no new question means no new question. After, from 21st onwards, no new question. Then whatever you have done, just keep practicing them again and again. And let me tell you, whatever we have covered in our regular classes, practice classes, during live revision classes, pre-scene mock, everything, this is more than enough to get very good marks. Even you look at today's question. What was in today's question? 75% loss relief group was there, 75% capital gain group was there, Consortium was there, IR 35, loss relief, each and everything which you have already studied, ethics part. The main thing is, the main challenge is in ATX, the main challenge is how speedy you can recall the relevant rule at relevant place. If you can recall the relevant rule at relevant place, ATX will never disturb you. For recalling the relevant rules at relevant place, you have to practice. And I'm saying from 21st August onwards, no new question. Just keep practicing whatever you have already done. And my WhatsApp support will be available till the last day of exam. And from my side, best of luck to everyone. So again, WhatsApp support will be available till the last day of exam. And now this is the last live revision class. Of course, no more live revision classes, but if you want me to upload the question number 2 or any other question, so I will upload, and I'll make sure that I'll be uploading those questions within 1 or 2 days. Okay. So is there anything, student, you want to ask or say last minute of the class?